House Majority Leader Ferdinand Martin Romualdez, Chairperson Eric Yap, members of the House Committee on Appropriations, fellow workers in government, good morning. Thank you for this opportunity to brief the House of Representatives about the national government's fiscal position. Before proceeding, allow me to thank our legislators again for passing the bold tax reforms of the Duterte administration. These measures made us better prepared for the difficult times than at any point in recent history. We also thank you for passing the Bayanihan 1 and 2 Acts. Both laws enabled the government to effectively respond to the global health emergency without imposing a heavy debt burden on the next generation. The two measures exemplify the fiscal responsibility we need to guide our economy back to health. Congress must also be credited for the passage of several reform measures that will enhance our path to economic recovery. The most important of these is the CREATE law, which makes possible the largest economic stimulus program for our businesses. In recent press releases of publicly listed companies, they always mention that CREATE helped them maintain or increase their profitability and their ability to cope with the pandemic. CREATE gives out almost 100 billion worth of tax relief annually to the corporate sector to sustain employment or use for investments. We have kickstarted the engagement of a more flexible fiscal incentive system through the Fiscal Incentives Review Board. As chairperson of this board, we are determined to aggressively pursue investments that would greatly benefit the Filipino people. I must also mention the FISC law that would enable our banking system to withstand the pressures of a major economic contraction and maintain its viability. With fiscal discipline and economic reforms that work, the Philippines came fully prepared to meet the global health crisis head on. A discussion of our economic and fiscal prospects require an appreciation of the context that enabled us to meet the crisis without succumbing to it. Thus, my presentation today will highlight our 2016 to 2020 accomplishments. This will be followed by an update of our 2021 fiscal performance, our medium-term fiscal program, and the economic priorities in the remaining months of President Duterte's term. When the pandemic struck, we were financially ready. Our strong fiscal position, buttressed by our tax reforms and better tax administration, served us well. The government was able to collect revenues totaling 12.4 trillion pesos from 2016 to 2020. This is 20% or 2 trillion pesos more than what the previous administration collected in its 6-year term. The enacted tax reform measures, such as the train law, new sin taxes, the Tax Amnesty Act, collectively added 347 billion pesos more to the coffers from 2018 to 2020. This translates to more than 100 billion pesos additional taxes collected annually. From 2016 to 2020, the Duterte administration's revenue effort climbed to 15.9% of GDP from an average of 14% of GDP during the previous administration. In fact, in 2019, we achieved a 2-decade high revenue effort of 16.1%. This underscores the improved efficiency and professionalism of our revenue collection agencies. Despite the pandemic, revenue effort remained at 15.9% of GDP in 2020. Meanwhile, the total dividend remittances collected from government-owned or controlled corporations reached 317.5 billion pesos under President Duterte's term. The amounts include dividend contributions retained by our state banks to boost their capital requirements. Our total dividend collection is almost double the level of the past administration. These additional funds helped us meet the requirements for our COVID-19 response. The Duterte administration maintained a prudent deficit level, notwithstanding our large investments in the Build program, which is the president's main strategy to help Filipinos lift themselves out of poverty. From a meager 2.9% of GDP in 2015, infrastructure spending nearly doubled to 5.4% of GDP in 2019. Last year, despite the effects of the pandemic, we were able to maintain our infrastructure expenditures at 4.8% of GDP. Expectedly, the unplanned spending needed for our pandemic response temporarily pushed up our deficit levels. Last year, our deficit to GDP ratio expanded to 7.6%, or about double the threshold we worked hard to maintain. Nevertheless, this level is still sustainable considering that we had to rapidly enlarge our healthcare capacity and procure sufficient doses of vaccines for our people. Prudent fiscal management, appropriate economic investments, and improved revenue collections brought the country to the highest credit rating levels we have ever achieved. These ratings have been maintained amid the wave of downgrades globally. Our high credit ratings and exemplary debt management gave us easy access to financing from our development partners with very concessional rates and terms, especially during the difficult months of the pandemic. Our average interest rate declined from 5.2% in 2015 to 4.2% per year in 2020. Last year, we successfully raised 2.7 trillion pesos in gross financing to support our budget needs, respond to the contagion, and continue our economic investments. With abundant liquidity in our own financial system, we have continued to source more than 70% of our borrowings from the domestic market. Due to increased spending to support both health and economic requirements, the pandemic resulted in the global trend of higher government to debt to GDP ratios last year. What sets the Philippines apart, however, is that we entered 2020 with a historic low debt to GDP ratio of 39.6%. This means that we could better absorb additional borrowings than other countries whose debt ratios were already at 60% before the pandemic. Hence, the 15 percentage point increase in our debt to GDP ratio in 2020 is still within the prescribed bounds of fiscal viability and the experience of our neighbors and rating peers globally. In addition, more of our fiscal resources are being directed towards productive spending rather than debt servicing. The ratio of our interest payment to expenditure dropped from 13.9% in 2015 to only 9% in 2020. This indicates that our additional borrowing is beneficial to the economic development rather than a burden to growth. In the second quarter of 2021, our economy grew by 11.8%. This is significantly higher than what the market predicted. It underscores the strong capacity of our domestic economy to return to the path of rapid expansion. Reflective of this positive development is the recovery of our revenue collections. For the first 7 months of 2021, total revenue collections reached 1.7 trillion pesos. This is 4% higher compared to the same period in 2020. From January to July of this year, our tax collections grew by 10% to 1.6 trillion pesos compared to the same period last year. With the higher public health bill, however, our deficit was pushed to 837 billion pesos for the first 7 months of this year. This is 20% more than last year's level. In order to cover this budget gap, we needed to borrow more. Fortunately, with our high credit ratings affirmed this year, we were able to negotiate better interest rates and terms. In the first half of 2021, our gross borrowings amounted to 1.9 trillion pesos. Of this total amount, 1.6 trillion pesos came from domestic sources. The remaining 285 billion pesos came from external sources through global bond offerings and official development assistance. This includes around 60 billion pesos we contracted from our multilateral partners for the procurement of COVID-19 vaccines. With improving collections, mainly through digitalization, we expect to recover our pre-pandemic revenue levels in 2022. By our projections, we will be collecting 3.3 trillion pesos next year. This is equivalent to 15% of GDP. The estimate is 14% higher than the 2021 revenue collection program of 2.9 trillion pesos or 14.5% of GDP. Revenues will continue to grow from 2022 onwards, reaching 4 trillion pesos in 2024. Our tax collection is projected to reach 3.1 trillion pesos next year, equivalent to 14.2% of GDP. This is significantly higher than the programmed 2.7 trillion pesos for 2021, equivalent to 13.7% of GDP. Tax collections will be on an upward trend starting next year, reaching 3.8 trillion pesos by 2024. From 2022 onwards, we expect revenues to exceed expenditure growth. We estimate the budget deficit to decrease to 7.5% of GDP next year from 9.3% of GDP projection for 2021. The medium-term fiscal program will follow a declining deficit path. By 2024, our deficit to GDP ratio will settle at 4.9%. Total gross borrowings for 2022 are programmed to drop to 2.5 trillion pesos from about 3 trillion pesos expected this year. These borrowings will support both our public health response and the economic investments needed to spur growth. Following the pattern set the past few years, the bulk of the borrowings will be sourced locally. Although we have acquired additional debt to meet the health emergency, public borrowing remains well within sustainable levels. The national government debt to GDP ratio is projected to slightly increase to 60% in 2022 from the programmed 59% ratio in 2021. Our debt ratio will start its downward trend from 2023 onwards. I would like to emphasize again that the increase in our debt level is only temporary. It will not stem from profligate public spending, but rather resulted from a universal shock that deteriorated the financial positions of almost all countries around the world. The principal contributors to the increase in our debt are the weakening of the economy and lower revenue collections due to the lockdowns, both of which are expected to recover quickly as soon as the infections are contained. To achieve a solid recovery, we need to ensure that fiscal responsibility is constantly observed. The executive and legislature must work together to fight the pandemic sustainably by keeping our deficit and debt ratios within reasonable levels so that we can leave our finances in great shape for the next administration and the future generations of Filipinos. Fiscal discipline will save us from this long battle against the pandemic. There will be uncertainties in the evolution of the pandemic, to be sure, but with increased vaccination of our people, we should be able to avert severe spikes in the infection rate in the coming period. So far, our vaccination program is in the right direction. We have been receiving a steady supply of vaccines from multiple sources and have been vaccinating our people apace. Our running total of vaccine supplies has already reached 48.5 million doses, and we have successfully administered 31.1 million vaccine shots as of August 24. This consists of 17.8 million for the first dose and 13.3 million for the second shot. In the remaining months of the year, we expect the arrival of an additional 147 million doses. With more reliable vaccine deliveries, we are, we are ready to scale up the inoculation drive. We have managed to administer 710,000 vaccine shots in a single day. We are aiming to bring that up to 1 million daily to achieve the inoculation of all Filipino adults by the end of this year. We will also continue building up our public healthcare system and improving on our tracking, tracing, and treatment methods to withstand any possible surge in infections. The goal here is to remove the pandemic as a determinant of how our economy performs. In the remaining period of the president's term, we will rapidly modernize governance, continue our public investments, and pursue market-friendly reforms to achieve a strong economic rebound. With this high multiplier effect, we will maintain the pace of our Build program. Our projected infrastructure spending will remain above 5% of our GDP until the end of the president's term. We will continue investing in our young population, which is our strongest asset. With an average age of 25, we have a very young and skilled workforce. They will sustain demand and create the wealth for the national economy to resume its path to rapid growth. It is because of this demographic sweet spot that we are confident that we can bounce back strongly from the economic impact of the pandemic. To ensure the long-term recovery of our economy and attract more foreign investments, we will work with Congress to pass the amendments to the Foreign Investments Act, the Public Service Act, and the Retail Trade Liberalization Act. We are also committed to pursue the remaining packages of our tax reform program. These include improvements in our property valuation system and in the taxation on passive income and financial intermediaries. We will also push for the swift enactment of the military and uniformed personnel pension reform to keep the system fundable, manageable, and fiscally sustainable for the long term. We are likewise supporting the Capital Market Development Act of 2021. This will further deepen the domestic capital markets by building a sustainable and portable corporate pension system for our people. The Duterte administration is fully determined to restore the vigor of the Philippine economy at the soonest possible time. In the face of this unprecedented crisis, we will continue to work hard until the very last minute of our term to ensure a legacy of a dynamic, market driven economy for the Filipino people. Thank you.
Can we truly consider the 2022 National Expenditure Program a COVID-19 response budget? It's probably the most senior member of the DBCC, the distinguished Secretary of the Department of Finance, may have the option to answer this question.
Mr. Chairman, thank you very much for the question, Mr. Chairman, Honorable
Secretary of
Congressman. COVID-19 is a problem. And definitely the budget aims to address that problem. But it is not only, this budget is not only a COVID-19 response problem, response budget. It also responds to the needs of the entire Filipino nation, and that includes needs for education, needs for defense, needs for infrastructure, uh, and the like. So, of course, COVID-19 is important, but it is not the exclusive goal of this budget. Thank you.
In other words, Mr. Secretary, the NEP is an all-purpose budget with priority to COVID response. Could that be a proper way of labeling the 2022 NEP?
Yes, Your Honor, Mr. Chairman, yes, it is a very appropriate way to label it. Thank you.
Now, I don't know who would be the one to answer this next question without any generalized attribution. In actual and specific allocations, how much is appropriated for the following: procurement and rollout of vaccines, B, continuing and intensified contact tracing, C, mass testing of the population and immediate treatment of COVID-19 patients, D, social protection, and E, economic support to distressed enterprises and industries. We would like to have the exactitude of the figures without any attribution.
Thank you, Your Honor, Mr. Chairman. Unfortunately, I do not have the breakdown in front of me, but I am sure OIC Tina Kanda and her staff would have it.
Despite the DBCC's collective bright projections on the economy, why does Moody's Analytics forecast that the Philippines will be the last to recover among the Asia Pacific region of about 40 or more countries from the pandemic-induced recession, and this recovery will still be in the last quarter of 2022. I throw this question to any of the members of the DBCC.
May I attempt to respond, Mr. Chairman?
Secretary.
Your Honor, to be honest with you, we do not know why they project that way. We are not privy to how they do their projections. Our projections are based on the best available knowledge from the members of the DBCC, which include the central bank, the Department of the Budget, NEDA, and the DOF. Now, what others have and what crystal ball they have, we have no idea. Thank you.
This projection of Moody's Analytics was way back in January 2021. And I do not recall whether there was any statement coming from our economic managers refuting the statement and forecast of Moody's Analytics.
Mr. Chairman, Your Honor, we do not make it a practice to respond to each individual people who project our economic growth or not. We do not make it a practice to respond to them. That is their own assessment. And in fact, we do score. We do have a scoring of how they do. And quite frankly, and we publish this scoring of how people, how accurate these projections are. But we do not respond individually to them.
But anyway, this is a very serious indictment and a very bad forecast for the country. I think this would call for a rejoinder. But anyway, if that is not the practice, so be it. Now, my next question is, we would like to have an explanation on the statement that despite the escalation of Philippine external and internal debts, debt service will be manageable. Can we have an explanation for that statement?
Yes, Your Honor, Mr. Chairman. We have made several statements in several fora, in several points as to the manageability and the sustainability of our debt program. Primarily, our program is very manageable because it is very conservative. We only fund what is required, and we are fortunate in that our credit rating is the best it has ever been. It has not been downgraded, and that allows us to access credit markets at a relatively low interest rate. In fact, I just pointed out in my statement that compared to 2015, our interest rate in 2020 is already 100 basis points below that achieved by the previous administration. We also are thankful that the monetary board and the BSP has reduced the are thankful reserve requirement of banks, and has the monetary board and the BSP has reduced the sufficient liquidity in the system requirement that allows us to access credit markets at a low interest rate. Sufficient sufficient liquidity in the system that allows us to access credit markets at a low
One is
interest rate.
interest payment, and the other is principal amortization. There are two components. May we know how much one will be interest by the country and the other payment principal in 2022? There are two components. May we know
Time out, Secretary.
How much was
Excuse me,
spent by this country
Excuse me,
for interest payment
Mr.
since
Chairman,
2022?
Your Honor, there is a feedback, and I cannot hear the question very well.
excuse me.
I will repeat my question, and I
Mr.
hope
Chairman,
this will not be
Your
deducted
Honor,
from my 5 minutes.
there is a feedback, and I cannot hear the question very well.
Excuse me.
I will repeat my question, and I hope
Mr.
this will
Chairman,
not be deducted
Your
from my
Honor,
5 minutes.
there is
Mr.
a
Chairman,
feedback, and I cannot hear the
the
question.
question is, there are two components
Congressman
of debt
Lagman.
service.
Mr. Chairman,
One is interest payment, and the other is
We will
principal
close the
amount.
proceeding.
The question is, my first question
Time
with
out.
respect to this item is service. How much interest payment will be paid?
Please,
Is by the
committee is
principal
hereby
in
suspended.
2022. My first question with respect to this item is, how much interest payment
excuse
will
me,
be paid
while I refer
by the
to
Philippines
our
in 20?
We have
refer to our
suspended the
tables.
session. Secretary, we have suspended the session.
Excuse me, while I refer to our
Treasurer
Yes.
De Leon, are you there?
Yes, Secretary and Congressman Lagman, if I may proceed to answer your question. Sir, okay, sir. For the interest
De Leon,
payments for
are you there?
2022, yes, it would be about 512.6 billion. If I may proceed, and for the principal amortization, sir, it would be about 785.2 for the interest payments for 20, for a total of about 1.3 trillion pesos. And that's included in Table B17 in the submission to Congress. Thank you po.
Which of these two components are appropriated? Which is of budget?
Time out, time out. We have suspended the session.
Of,
Congressman Lagman, can you
what we call
Automatic appropriation.
Now, first question, Mr. Chair, given this at the 2021 budget briefings, the projected growth rate for 2021 was again at 6.5 to 7.5%, no? So given this poor track record by the DBCC, Mr. Chair, what reason is there to expect doon sa projection nila na 7 to 9% projected growth for 2022? How are we going to materialize this, Mr. Chair? May I get a reply? May I get a reply, Mr. Chair, either from the DBM, from the Secretary of Finance, or from NEDA?
Well, the question is, what is how accurate are our projections? I believe that's the gist of the question.
Yes, Mr. Chair.
Thank you. Mr. Chairman, as the good congressman mentioned, the projections were off in 2020 because of the pandemic. In fact, for 2021, we are also off because of the emergence of the Delta variant. Okay. Now, our projections are given all the knowledge that we have at the moment, and they are not bloated up. They are projections that are actually what we have with our current knowledge now. We do not know, however, what kind of behavior the pandemic is going to have. So we are just as accurate as the pandemic going forward. So we, however, must give you our best estimates, and those are the ones now that are contained in the submission of the President's budget to the Congress. Thank you.
Thank you, Chair.
Thank you, Secretary. You still have 2 minutes, Congressman Sarah.
Mr. Chair, the figures look accurate. Thank you.
Thank you, Mr. Chair. So from these figures, can we just flash it again, no? From these figures, Mr. Chair, we can derive that from 2016 to 2018, the government is paying more than the program debt service, no? But from 2019 to 2020, we have been paying less. Can the DOF explain this? No? What can the Department of Finance say to this?
May I hear the question again, please?
Yes, Mr. Chair. From these figures, which you said are correct, from 2016 to 2018, we have been paying more than the program debt service. For example, the debt service for 2016 is 740 billion. But we paid...
I cannot see I cannot see the slide as of 2016. It's cut off at 2017.
Okay, I'll start with 2017 then. No? For example, in 2017, the total debt service is 647 billion 280 million, but the actual paid is 680 billion 467,000. No? Yet, I observed that from 2019 to 2020, we have been paying less. For example, in 2019, total debt servicing is 887 billion plus, but we paid actual debt service is 842 billion 449, and so on. May we get an explanation from the Department of Finance, Mr. Chair?
Secretary?
Yes, Mr. Chairman. When we project the debt service, we make certain assumptions, for instance, as to the interest rates, and sometimes, this is an assumption, and sometimes the interest rate actually changes, and that would account for the differences between the actual and the projection. May I just conclude by saying the debt market domestically and internationally are not static. They are a dynamic market. And therefore, if there are opportunities for us to take advantage of certain situations, for example, to swap higher interest rate debt with lower interest rate debt, we do that. Or if we are able to extend our maturities, we also do that. So again, the department and the Bureau of Treasury react to the dynamic nature of the debt market, and of course, we are not always able to predict the movements of the market. But rest assured, we do our best to do the best by the Filipino people. Thank you.
Thank you, Mr. Chair, Mr. Secretary. So, exactly, ano po ang every year na umuutang tayo, ano po ang mga determining factors, no, para tayo umutang every year?
Every year, we borrow because number one, we invest actually more than we make investments more than our revenues. That is a very wise thing to do, especially if the return on investment is lower than the cost of the debt. So that is why we borrow. Another reason is because maybe our expenditures go up, like because of the pandemic, or we are short temporarily in our collections of revenues. So those are the factors that affect the reasons for borrowing. And also, we also borrow when there are new projects that have been developed by the different departments.
Thank you,
Mr. Chair.
Secretary.
Thank you, Mr. Secretary. So, as you mentioned, isa sa malaking factor bakit tayo nangungutang every year is because of our deficit, no? Next slide, please. I'll show to you.
Yes, and we have a deficit. And basically, in the past years, we have had deficits because we are investing in our human capital, because we are investing in our physical infrastructure. And in the recent years, because we have had a spike in health expenditures because of the pandemic. Those are the basic reasons for the deficit spending. Now, deficit spending, provided that your return is better than the cost of your money, is a wise thing to do. Thank you.
On the screen, Mr. Secretary, our data on fiscal program, no, which we will find the deficits in our budget. Are these figures correct?
Let me check, please, with our own figures. What I have here is in
2.6, for example.
Tingnan mo na.
where do we have the deficit? It's confirmed. Your figures are confirmed, yes,
Yes, sir.
by the Bureau of Treasury.
Yeah.
Yes, sir.
Thank you, Mr. Secretary. So if these figures are confirmed, if you look at the figures, deficit, for example, in 2016 is 353.4 billion. But our gross borrowings amounted to 507, no? Yeah. And if you go down the line, in 2020, our deficit is 1.3 trillion, but we borrowed 1.6 trillion. My question now, Mr. Secretary, why do we borrow so much in excess of our projected or actual deficit?
Well, Mr. Congressman, Chairman, actually, the gross borrowings include repayment of past debt. So what you should really compare it is with net borrowings. But even if you look at net borrowings, it will still be higher than the actual deficit, but not much, because we have to prepare for the next year. So we cannot balance the amounts exactly at the end of each year, because we prepare cash for the next year. And typically, the first quarter, second quarter, third quarter are usually heavy deficit quarters, because that is where the weather is good and we can spend for our physical infrastructure. So again, to summarize, we have to look at the net borrowings rather than the gross. And secondly, we have to look at the uh, anticipatory borrowings we have for the funding for the next year. Thank you.
Okay, thank you, Mr. Secretary, Mr. Chair. So may we just know where do these borrowings really go? No, are these all? Can we find this in our budget books as we tackle this NEP now? Yung details nitong borrowings na ito. Dahil
Yeah, may I answer, Mr. Chairman, Mr. Congressman?
Secretary.
Actually, we do not spend anything that is not in the budget. So if you want to know where the money goes, you just look at the budget. Thank you.
exactly, Mr. Secretary. Kaya po natin hinihingi yan dahil yung detalye niyan dahil tinitingnan natin, no? Palaki ng palaki ang ating utang. It's already 11 point something this year, no? And it's projected to reach 13 trillion next year, no? Average, kung bibilangin mo yan, halos more than 100,000 ang utang ng bawat Pilipino, no? But nonetheless, I will just avail of my second round to continue with my line of questioning. Ang gusto lang nating malaman dito, especially during the time of pandemic last year, napakalaki ng ating mga inutang, no? And gusto nating makita saan ba talaga pumupunta ito. If we said that our priority is pandemic intervention, pandemic responses, then we want to see if indeed all of this, at least majority of these borrowings, napunta doon sa dapat niyang pagkapuntahan. No? So I'm
Well, Let
yielding
me
na my time and
answer before you add your time. There are really two reasons that our borrowings went up in 2020. Number one, of course, our expenditures went up. But of course, the second reason is because our revenues dropped. Our revenues dropped because of the lockdown. And as you saw, uh, our economy contracted by a little over 9% last year. And when an economy contracts, that means to say your revenues also contract more or less in the same proportion. So the increase in borrowings covered the drop in revenue, at the same time the increase in expenditures due to the pandemic. Thank you.
yes, Congressman Lagman, can you just wind up, please? Because in your first interpellation, there was already some exceeded minutes. Please wind up your questions for the Secretary.
Yeah. My questions are very short. By the way, my last point was that uh, the interest payment as well as the principal amortization constituting the debt service amounts to 1.3 trillion for 2022. My question is, what is the ratio of 1.3 trillion to the gross domestic product?
Secretary?
My response, Mr. Chairman and Congressman Lagman, is for 2022, the projected interest payment as a percentage of GDP is 2.32%. And the debt service, I don't have the total debt service as a percentage of GDP for 2022, but for 2021, the total debt service is 5.88%.
In order to see the universe
Yes, Congressman
on
Lagman.
debt service, I think we need to account also for the ratio of the principal amortization. So
No,
we
this
should,
is it.
Please
This is it.
wind up, Congressman Lagman.
What's on board is it already.
was it
Sorry. This is it. For 2022, it is 5.88%.
5.88? That is
Yes,
for
sir.
both interest payment and
Yes,
principal
sir.
amortization. Thank you. Thank you. Thank you.
Thank you,
Now,
Congressman Lagman.
my next,
Mr. Chairman.
You have 5 minutes to interpolate.
Thank you, Mr. Chairman. My question is directed to the Secretary of Finance or to the BIR relative to the concern of our top taxpayers relative to the implementation of train law, specifically on Revenue Regulation number 11-2018
That,
on the designation of our top taxpayers as withholding agent by publication in newspaper of general circulation or posting in the BIR websites, which shall serve as notice to the top taxpayers designation as withholding agent. Now, my question, Mr. Secretary, Mr. Chairman, to the Secretary, is it fair that taxpayers not notified individually by the respective revenue district offices who also have not read the publication in newspaper of general circulation, much less access the BIR website, be assessed for withholding tax deficiencies? That's my question, Mr. Secretary, Mr. Chairman.
Secretary?
thank you, sir. May I refer that question to the Bureau of Internal Revenue Commissioner Dulay? See in here?
Commissioner Dulay, you're requested by the Secretary to answer the question of Congressman Alan T. BIR.
Anyway, what's the answer to that? Do you know?
Hindi yata nakinig siya, Secretary.
Let me attempt to reframe the question, Mr. Chairman. The question is it fair to notify by publication? Is that the question?
Mr. Chairman, my question
Yes.
is it fair for the taxpayers to be assessed with non-withholding tax deficiency when they are not notified by the respective revenue district offices as withholding agent? Much less they were not able to read their names as withholding agent in the newspaper of general circulation or access the website of BIR. So now they are being subjected to non-withholding tax deficiency when in fact they were not informed in the first place.
Yes.
Based on revenue regulation 11-2018.
Yeah, Mr. Congressman, I must confess I am not an expert on that. But let me just comment that I think you have a point that it might be unfair. So let me check with the BIR on this question, sir, because I sympathize with your constituents on this matter. I will come back to you as soon as I am able to speak with the commissioner of the BIR. Thank you, sir.
Thank you, Congressman T. Secretary, you were requested the BIR to submit why there is some retroactive measures. And then,
Yes.
and then another.
Yes, I will get the BIR to respond in writing officially to the congressman, the good congressman. Thank you, sir.
Noted.
The SDR, as explained by the BSP, is a liquidity measure. Ma'am, liquidity is not our problem. We have plenty of liquidity. Because this SDR is going to increase our reserve requirement, and our reserve requirement is already over 100 billion pesos, which is quite sufficient for our needs. Okay. Now, utilizing this for COVID response, of course, is possible. But our limitation in spending is a fiscal limitation, not a liquidity limitation. Liquidity, as I said, we have had no problem raising liquidity. Our problem is our fiscal deficit. This year is expected, last year was over 7%, and this year is expected to be over 9% of GDP. That is our real problem. Now, what we have to do is try to see, and I have asked my staff to see if we can convert the SDRs somehow into fiscal space. That is going to be a matter of study between us and the BSP, but only if we can do that can we increase our spending because we will have additional fiscal space. To be quite honest with you, our real problem here is that we are borrowing more than what we are spending on our investment in infrastructure. When you start doing that, and you are using up your fiscal space to cover current expenditures, our credit rating and our credit worthiness is going to be badly affected. That's why in my speech, I said it is very important that we manage our debt and our spending very, very carefully. Thank you very much.